Hi dear traders, market closed last week on a downbeat note as the US private sector added fewer jobs than was expected. It was supposed to be positive news for investors as it served as a signal that the Fed might ease its monetary tightening. However, the stock market finished the week with a significant decline as investors saw no positive signs. The US dollar index, which demonstrates its value against the basket of 6 major currencies, was influenced by carry trade speculative activities. Apparently, traders reacted to a possible change in the course of the Fed's monetary policy. This week, the US will publish an inflation report that may restore confidence in the regulator's hawkish stance. In the meantime, the US dollar index is trading well below the key level of 103. As for the European Central Bank, its future policy is rather clear. Inflation in the Eurozone is slowing down, but still running far above the target level. This means that the European regulator will continue to raise their rate despite the threat of recession and a downturn in economic activity. Some ECB officials began to call for a pause in monetary tightening. For instance, Ignacio Visco, governor of the Bank of Italy, acknowledged the need to stop the rate hiking cycle. Meanwhile, the UK Central Bank is determined to maintain its hawkish stance on monetary policy. The pound sterling is taking advantage of this and gaining value. Trading against the US dollar, it has reached a 14-month high of 1.2848. The Japanese yen finally got a chance to win back some early losses. Despite an ultra-loose monetary policy of the Bank of Japan, the yen managed to recover against the greenback, which was easing across the board. Besides, traders expect the Japanese government to intervene in the foreign exchange market to prop up the national currency. In October last year, the Bank of Japan made an intervention when the yen dropped to 145 against the US dollar. At the moment, the quote is holding close to this key level. Commodities markets saw some sharp fluctuations in the previous week. The trajectory of gold resembled a roller coaster ride, as the precious metal is very sensitive to the news about interest rates. Gold traders were actively buying and selling the asset, but at the close of the week, the overall changes were quite moderate. Intraday trades could have brought the biggest profit. Gold closed the session at $1,925 per troy ounce, which is just $5 above the opening level. In the oil market, the tone was set by the statements from Russia and Saudi Arabia, the largest oil-producing countries, signaling their intention to cut crude output. They served as a bullish driver for oil prices. At the same time, oil's upside potential was limited by weak energy demand in the face of a global recession. BRENT crude settled at the level of $78 per barrel at the end of last week. These are the trends of the last trading week. Do not miss our daily news reports to be always in touch with the latest events. See you!